Very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and in today's live trading room, in this live webinar, we're going to take a look at the Forex market and some other charts, perhaps like the DAX or gold. Before we dive into the topic of today, which is trend lines, be aware that this webinar is intended for a global audience, but may not be suitable for everyone. Therefore, please take a look at this link, admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out more information about that and other details and conditions. Also, trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, and plus you are aware of the risk involved when trading. All right, maybe just a quick sound test. Let me open the chat if you can. Good morning, Beverly. Just to check if you can hear me properly. Is everything okay from the sound point of view? Maybe I should put the mic closer. Let me know, okay, if it's good like this. Hi Edith, hi Nath. Great, perfect. So we got a lot of things to discuss, trend lines, but first of all, though, be aware that Admiral Markets won the broker award in the UK for this year, and that is partly perhaps due to the MT4 Supreme Edition, for instance. It has 56 additional features, so take a look at that. I do mention it as always, but there are sometimes traders that are joining us for the first time, so take a look at that. And you can find out more information. There are really a lot of things: correlation matrices, alarm managers, easy portals for ordering, or opening orders, and sentiment matrices, and a lot of things. So take a look at that. And you can also find analytics, for instance, and I can show you that, like the technical analysis. And yesterday there was a post from Nenet, dollar yen bouncing off 120 zone. And there's also wave analysis for myself. I this morning was talking about the fact that the euro dollar is jammed between resistance fibs and support trend lines. And I like the 1 hour chart because we're not going to focus on the waves, don't worry, but if you don't like waves, but it's interesting because it seems to be stuck between perhaps a wave 4 support levels, support fibs, and trend lines. Oh, you cannot see the chart? Yeah, it should be okay. Let me check with others. Can you see my chart? All right, so Beverly and Edith can see it. Not sure, maybe it's hidden, maybe the screen is hidden somewhere behind some programs perhaps, and you just need to maybe close the other programs and it could pop up, for instance. Maybe it's in a different screen. That could be the reason. So we have fib and trend lines, and a potential for wave 5 or a potential for a turnaround. If we break below the 50 fib, then we have space down to this trend line. If we break this trend line, roughly to this trend line. And when we break the 50 fib, we're breaking the long-term moving average as well. So from that point of view, we could have that space. To the downside, we could see perhaps price make that acceleration and turnaround from this 78.6 fib. I would only consider that really more likely when we break that 50 fib. Otherwise, this is still more of a support zone. And this becomes the next resistance zone. All right, before we dive into the charts, let's take a quick look, hear what's going on. We have pound news, inflation rate right there. ZEW economic sentiment, and some lighter US news. Okay. So your dollar made upside from this point on. I think it was that was Thursday actually. No, Friday. Okay. Friday, and was looking like this. You can see that everything was aligned. The moving averages were bullishly aligned. This is actually a very long-term moving average. This is the long-term and this is the short-term. You can see everything was aligned, and once price broke above it, we had this breakout trade to the upside. Personally, I didn't trade it, but it did have that everything, from that point of view, everything was aligned. I didn't like it that much because I thought the space was quite limited up to the 78.6 fib, but still, they made a decent upside, in fact. So it reached the 78.6 fib, stopped there twice, made a retracement, and is now again at the 78.6 fib. So that means that there is potential for price to perhaps break to the 88.6 fib, but that's even less space. So you can imagine I'm not really jumping for joy for that. Now, it doesn't have to necessarily stop there. From the sequence levels that I use, this is still the base. That's level 1. That's level 0, sorry. This is level 1. This is level 2. This is level 3. So there is maybe the potential to go from 3 to 4. So from that point of view, we kind of broke above 3, hooked a bit back to 3, now maybe using it as a bouncing spot. We could go up to level 4. But as I said, I always, at the moment use it as a discretionary tool. And what I see still is a lot of resistance, even in between 3 and 4. So I'm not really a big fan of trading it to the upside. To the downside, you can clearly see that everything is actually bullishly aligned. So it will really have to break below the 50 fib here before things start to become interesting. Right? It has to go below that tunnel, in fact, from my point of view. Now, it is breaking above this band in the meantime. So technically, if it were not to be at such a high fib, it would be a breakout right now. But because it's at such a high fib, like the 78.6 and the 80.6, I don't think there's a lot of space. And from that point of view, it was even a bit better here, where there was still space up to the 78.6 fib. One of the reasons I didn't like that trade at that time, though, was the fact that the 4-hour was pretty choppy. But at that time, there was one difference, though, that when a breakout happened here, there was a bit of space already between the tunnel and the band. Anyhow, enough about that. That's more about the past. At the moment, I see more value probably even in waiting for price to get up here and looking for reversals than anything. Or, as I said, if it breaks below the 50. Now, if it breaks this top, there could be some breakout space here to the upside, but it would have to invalidate this level first of all. I want to see that level break before I look for really more upside, because in my opinion, this is still the start of a potential bearish move here from this top to this bottom, and this is all corrective compared to that swing. Once that swing breaks, and that swing is not valid anymore, then there's more space to correct higher, and we could be going up to retest this top or close to it. So that space is there. Once we break below support, then there's space to go here and then perhaps here. So the most likely trade, in my opinion, for today is perhaps to look at resistance here. But that's just one pair. Let's take a look at others to see if there's something more interesting going on. From a trend line perspective, by the way, because it focuses on trend lines, let me add some trend lines to that. What could be interesting here, you got a trend line as well. Let me maybe remove everything. All right. So what trend lines could be interesting? Well, we got a lot of trend lines on the euro dollar. Some of them probably would not be used today. This one could easily be used. Let's see. Something like this. Now, if that trend line breaks, I'm not really that interested in it because this trend line is already pretty close by. But it could be good for informational purposes. So these are 3 trend lines we can use. We could probably use resistance too. We got maybe this line already we can use. we had this one in the morning. We could probably use this one as a channel line, the top of the channel line. Maybe even use, let's see, this one as a resistance potentially. So these could be resistance lines, these could be support lines. All in all, it seems to be, from that point of view, it seems to be a bit tight spaces. You can see these trend lines are not really offering a lot of free zones, and if one line is broken, you're kind of running into the next line. So with that kind of formation, there's not maybe that many trades available from a breakout perspective. From a bounce perspective, perhaps yes, perhaps here it's still, although I'm looking for a break here, this could still maybe be a bouncing spot. But for me, I think still this bouncing spot here or this breakout spot are the better ones. All right. Pound USD made a really big move from this morning already. A bit surprising how fast it moved so early in the morning. In fact, it moved up more than 60 pips in the last few hours before London even started. Quite an exception, quite surprising. There were two trend lines here that I had on the chart, and price bouncing off of those. Now actually breaking, about to break, or at least retesting these trend lines. And from that point of view, I think the pound USD is interesting for upside and has space at least to the 61.8 fib, if not the 78.6 fib. That's something that I already had in mind at the beginning of this week, as basically price started to correct here, like this. That does seem like a correction for more upside. This was a strong momentum, and therefore more upside seems likely. Last week, we were looking at longs in here. No, it was actually somewhere in here, I think. And I took another one here, in fact, right here on Thursday for about 60 pips there. Because why? Because on the 1 hour chart, we had a big momentum and it finally hooked back to the band. So that seemed, and then it bounced off the band. So right there. So that was the second. And then we had this one not. I didn't catch, but we got some consolidation like that. Therefore, upside seems more likely indeed. So let me put on the levels. These are the trend lines I have at the moment. Let me put on the levels that I like to see. These are Fibonacci sequence levels. All right, so from an hourly perspective, level 1, level 2, level 3. The break from level 3 gave the space to level 4. So that's the trade I was trading on Thursday, was this kind of push from the band up to level 4. Hook back, and we're using level 3, as happens more often, or level 2 as a bouncing spot. And once we break above this 153.75, there's that breakout potential to the fifth level, potentially. Now we do have some fibs perhaps standing in the way, so let's put a fib from here to here, as I did already earlier. And so the 61.8 fib could be a stalling spot, but perhaps there's a higher chance the price could get up to the 78.6 fib. So I like that upside potential there. And in fact, as soon as this candle closes, I would say that potential is already there. Preferably, well, there are two options. One is this candle already breaking above, clearly above the band. That's one. But that candle break is so big and it's slamming right into resistance. So from that point of view, I would say that normally is already a good signal. But from a discretionary point of view, you could easily put a button there and say, well, it's such a big candle, it could easily see a retracement, it's hitting local resistance, it's a top, and from that point of view, a bit of a retracement could be better. So therefore, maybe my preferred, instead of taking it right now, I think that I prefer to perhaps even if the next hour is up, and even the hour after that is up, I would rather actually probably let it pull back to, for instance, this 8 EMA. It's going to be dragged along, and there's a high chance the price will get back to that 8 EMA and bounce off of it. Probably bounce back off this 153.75, and I think I would target the 78.6, this 155, the fifth level here. So I think that could be a very interesting swing trade for this week personally. Did anyone see Nenet's recap yesterday by any chance? I'm just curious if Nenet had the same. Maybe he already had a trade that's taken in and out. I don't know what exactly his analysis was. Did anyone see it yesterday by any chance? So yeah, I think that has a very good potential. I'm still going to be a bit patient for this situation to develop, but it's very close. Even if it maybe hooks back to it right now, it could be good. Probably, I mean, ideally, but this is now really talking about details. You get one more hour candle like that, and the next one makes that pullback to the band or the 8 EMA, and then it bounces. And I wouldn't even need anything else. I mean, I would be okay with a pending order even at that level, personally. Especially if it makes another candle like that. One or more. Then I would definitely be okay with a pending order. Now probably still looking for a market order. But yeah, very close to pending order status. And why do I say that? Because for me, when it's a pending order, then I assess it a higher probability than if I would trade it with a market order. Last week, Beverly, when you traded the upside as well from here, and you hanged into that trade and got out maybe somewhere, depending on how tight your trail was, somewhere in here, I think. You actually were able to catch a 1 hour impulse, in fact, and managed to survive this bit of a kind of sideways move, which on a lower time frame seems a bit more choppy, of course, but on an hourly time frame, not even that bad. And here, when you got out, actually price broke above the third level. And what I look for is when it breaks above the third level, what I started to notice more and more is the fact that if it breaks the third, you get more impulse to the fourth level. And after a pullback to the band and a candle close above it, it's often a good moment for one more follow through to the next level. Dalian, now that was showing upside, and well, I'm a bit cautious with the Dalian at the moment. It's a very choppy zone. We had this trend line break earlier this week. And I don't know, it seems you got a lot of trend lines, in fact, here potentially going on. And if there are too many trend lines, around, then that could be a warning signal as well, because if there are really that many trend lines, then often enough you're looking at a pretty sizable kind of consolidation or range. And from that point of view, when the moving averages are like this, and you have such a consolidation, then often enough price is going to be very difficult to trade, very choppy. What happens is that price kind of gets glued to the moving average. So when price wants to escape it, it goes back to it. It goes back to it. It goes back, back. And but that point that it goes back is not necessarily always the same. There could be a pattern in there that roughly in that zone there's a high chance of a bounce. So you could find some bounce trades. It's just that not always is going to be that exact the same level. But yeah, roughly there is a zone obviously that we can see with the lines here and here. So we got internal lines and a bit more wider support and resistance lines. And yeah, I don't know. From that point of view, this could be still a support area, but I'm not seeing any reaction as yet. I don't think it doesn't seem like it's bouncing at the moment, so I don't think it's really worth the trade. And it could be the moment that it maybe breaks out. So I probably would rather not touch it at this moment. AUD-USD, I did take a trade on that one, and let me show you. Yesterday, I don't know if you know about it, but I have a weekly FX recap on Monday morning that's posted in the wave analysis part, which you can find here. Analytics, wave analysis. And yesterday in that video, I was talking about the fact that this could be a resistance spot and potential turnaround for downside back down to, for instance, here and here. So the Aussie has been very sweet to me in the sense that it's following my thoughts nicely from down from here, up from here. Now I didn't really respect this zone all too much here. A bit of a pullback here, but it did nicely respect the -272 target. Funny enough though, after this resistance, I did take a long on that one, and I'll show you why before I dive in today. And another great way of using this tool, I'm actually starting to use it more and more. This was one of my tools that I just added, and I'm noticing actually that using it a bit more than in the past. You have 1, 2, 3. You go up to the fourth here, right? And what do you get at the fourth level? A bull flag, in this case. Great. That means the fourth level, you typically get good space between 3 and 4, 4 and 5, even between 5 and 6. And if you really go up to like the pound yen, euro yen, big movers, pound New Zealand, even between 6 and 7. So when you're only at 4, especially when you're only at 4, but above 3, typically you're going to see the potential for a lot more continuation of that trend, because below 3, everything is a bit more choppier. So when you get just above 3, things are just kind of like it's a fresh trend in a way. So when you have a bull flag like that, or if you hook back to level 3, even level 2, sometimes even 1, but not more than 1, because then it doesn't look that good. But typically 2 or 3, then it's the potential for going up to 5. And look at that. Not only was there a -2 target, but there was actually my target as well for level 5. Now I didn't get there. I exited around here as the weekend was approaching. And that was 120. I really like that trade because it was smooth sailing. I took the entry, I'll show you exactly where, here, on this candle, right here. So hit the level 4, made a pullback to the band. The first candle I was looking for, the first candle with a candle close above the band. Put the stop loss probably below this. and I exited somewhere here. So smooth sailing, as you can see. No heavy pullbacks, no rough times, a good journey, and a nice exit. And yes, it did continue higher, but who wants to necessarily keep that trade over the weekend? So I don't think that that's necessarily needed. But it did hit the level 5. You can see the 8 EMA is bullish as well, nicely supporting that. And we had a bit of an upside here, stopped, pulled back, continued, which is also pleasant to have that pullback already out of the way. So there are a lot of good things here with that trade. So now you can see that with the entry I was looking for. Now we're at level 5. So personally, I would probably rather see price get back to the 4th level. Level 5, I would rather see a bit of a deeper pullback, because before it gets up to level 6, there's a lot of space. And it would be better to get a bit of a pullback here before it maybe has that space up to 6. So a pullback down to 4 would be nice. So it's when you break a bit above 3 and it hooks back to 3, those are good bounces. If it breaks, it goes to 4, makes a bit of a pullback, great. But when you get up to 5, a bit of a deeper pullback is most of the time pleasant. So it would be nice if it actually retraced below the band, hit level 4, and then broke above the band, just like the audio is the 1-hour chart. Once it breaks below it, bounces here, and then starts to push up again, and then has a candle close, a 4-hour candle close above this band, that could be a good swing trade from that moment up to the level 6. Now the good thing about it is that if it doesn't break above the band here, but rather does this, breaks below it, hooks back to it, and uses the band then as resistance, it will actually make its way down to the tunnel. After which I would move this tool, the sequence level, to the next bottom. And if it does respect the resistance here, then probably not this one, but maybe the next one could be already shorts for downside down to the tunnel. So to summarize, potential trades are the orange line or the blue line. But I don't think so much now at the moment. Price is right at 4-hour band, which means that this could be a bit of a support level, but it hasn't retraced deep enough for me to be interested in going long now. So I'm neutral at this point. You can see on the hourly chart what happened. It's actually below the band, which means that this could be used as resistance to make that deeper push now down to the 1-hour tunnel and the level 4 sequence level. That in itself could already be a trade. I mean, if you really dive into details here, it could be a reversal retracement trade. I do think that there is a decent chance of getting down for a deeper pullback on the 4-hour chart. So from that point of view, it's maybe not a half bad plan. Depends what's available maybe in the rest of the market. Maybe there's something better. It is a reversal trade. We had strong upside. So, why maybe take that risk with that trade? I don't know. It's something that could be on the list, but 4-hour chart, I think, still better for 4-hour chart to set up at this moment. Plus, we're already at the 4-hour band, which, yeah, I don't know. I wouldn't be surprised that at some point we still get, if you use my time factor rule, we are at 1, 2, 3, the third, only the fourth candle. So there could be a fifth and sixth not breaking this top, and then we see the bigger down move like this. So from that point of view, if I trade a reversal, I might want to wait for my own time factor rule on this 4-hour chart before even thinking about it. Now, if any of these concepts, because now I'm really using maybe many concepts simultaneously. So if you are maybe joining the webinar for the relatively new here, then just let me know if any of these concepts or words I use is unknown, and I'll explain it to you. Kiwi had the same thing actually last week, level 1, 2, 3, 4, and I was trading it from here, from this breakout. Same thing, candle close above the band with space up to 5. There was not a lot of space, but I took 45 pips out of that. And it actually broke a bit above 5, but I stick to the 5th target here. And there was a bit of a breakout trade. Well, price is now above it. And now the Kiwi normally doesn't go to 6 that often because it's a slow mover. It sometimes will. And from that point of view, if it breaks above this band with the candle close, well, there could be that swing trade up to level 6. Now, let's see. Yep. So let me dive in. Bounced off level 5, broke above it, staying above it, bouncing off of it, and would need to close above this with the candle close. Candle close above that 21 EMA high. Once it does that, that could be the signal. Now, what I said, remember last time about the fact that what I liked about the Aussie is that it made a move up, then pulled back and continued. So technically, it would be great if the candle close maybe happened here. After kind of it, typically, if it breaks below the band this much, if it tries to pull above it, it will hook back to it before it continues like this. This is a pretty good rule of thumb, I think. It happens quite often. Now, not if it's like this, not if it's just like going back a bit in it, because then the band is still pretty much acting as a good support or resistance. Here you can clearly see a pretty strong momentum falling through, going through that band. That's why I might not, therefore actually, I would not take it on the first candle close above the band, but rather probably on the second. You see what I mean? So I think the Kiwi and the Aussie, the Kiwi is even closer to a setup to the upside. The Aussie maybe to the upside. Aussie later on after it retraces and then bounces. Pound USD looking good for upside too. Your dollar is making that move, but I really see very limited scope there. Space. All right. Kiwi. Dollar CAD. Loonie. 1, 2, 3, 4, 5. Broke below 5, went back to 5. Here, when it was at 5, it really didn't even make that pullback to 4, which for dollar CAD, it's also a slow mover. It's quite something, and didn't get there to quite till 6 yet, but has reached back to the tunnel. So that resets everything, in fact. And let me see how far the correction has gone. The correction has reached level 3 roughly. So this could be a bouncing spot again. So if I dive into the 15-minute chart, Let's see how far it has gone. It has reached level 3. Well, not necessarily on the hourly, but maybe on a lower time frame here. Yeah, I like to trade when the short EMA is for downside when it's below the tunnel. So from my perspective, I would probably wait for that on the dollar CAD. But then there could be some good downside here. All right, euro yen and pound yen could be interesting, or especially euro yen could be interesting because it is above level 3. It hit 4, hooked back to 3. So I'm thinking if it, if looking at this, maybe there has that potential to level 5. That could be a very interesting potential there. Even on the 4-hour chart, if this closes bullish, we have the ADMA bullish, we had a bounce off the band, there's space between the tunnel and the band, and we're hooking back to third and bouncing off the third. So yeah, that could be that swing trade right there. Now, dollar yen looks a bit choppy, so I'm not a very big fan of yens maybe in general because of that, because dollar yen, of course, is very important for that. But who knows? I don't. It's from a cross currency correlation point of view, I'm not a big fan of it because I see euro dollar resistance. I see dollar yen moving down. I don't see why the euro yen would go up to level 5. But maybe I'm overthinking it. But from that point of view, I like the Kiwi more, or I like the even the pound more, and later on the Aussie than maybe the euro yen. Just from a correlation point of view. But this correlation analysis is not sometimes always very useful. I thought the same last week about a different pair, and it moved up very nicely and graciously, and really didn't mind my correlation analysis that much. So don't remember which trade which currency pair that was, but so I don't know. Maybe the euro dollar will go higher than I expect somehow, or the dollar yen will start maybe making it upside all of a sudden. We don't know exactly what maybe could bring euro yen to the 5th level. It is at the 3rd level at the moment. Daily is a bit choppy though. All right. Euro odd is making a retracement. Pound odd too. So those, from a trending perspective, are less interesting. I do want to show you. I can't resist showing you a trade on the euro odd though. Let's see. That was on Thursday. Of a 1, 2, 3, 4, 5. Let's see, something doesn't add up. Yeah, here. So from here, price was actually breaking back below the band. And from an hourly perspective, it was passing level 3. We don't see it now, but I don't want to redo everything. And so it was showing the potential there for downside. And at this moment, it was a bit later on here, the 8 EMA, the short term, was below the tunnel. Band is down. And look at this. We passed level 1, 2, 3, went below 3 here, between the 3 and the 4 zone, which is the sweet zone. And don't forget, of course, that the hourly is in the downtrend, very importantly. So I took it on this pullback right here. And there were perfect scale outs at 5 and 6. And these are big zones. This is 60 and this is 110. So you can use those levels and you can see what kind of zone there was. It even moved it lower, even to 7, as you can see. And wow, even went beyond that. Well, actually, it hit the tunnel in the meantime, so we have to move it went to 7, in fact, before hitting the tunnel. And yeah, that was then, but still I couldn't resist. So you can see those usefulness not only on hourly, but if you recognize potential downtrend continuation on the hourly, you can even zoom into a 15-minute chart as well. What's happening now, though? So let's take a look. Let me renew this chart. One, two, we're above the 3rd. So there could be space up to the 4th at the moment, making that retracement to the upside. So from that point of view, on a 50-minute chart, we know that on the hourly, we're past this is 1, 2, 3. We got space up to 4. Candle close above the 3rd, indicating the break above the 3. Candle close right here. Okay, that's what I'm looking for most of the time. And then when we got back to the band, this could be ripe for a long, actually, from this point of view. It is a reversal long, but it's possible. Probably, I think now at this moment, obviously there was a potential for a long somewhere in here on the pullback, or even here with the lower time frame breakout. Now it's right at this level. So from that point of view, it could be good to let this hourly candle close and maybe wait for a small pullback to square up that candle, for instance. Stop loss here probably would be good, and target there. All right. So yeah, from that point of view, I think there's a potential for a reversal trade if it slightly pulls back still. Now this hourly candle is I don't know, it doesn't make sense. What I like about using the 8 EMA on pullbacks is that if it breaks above a zone, it typically will pull back to the 8 EMA, and that's something that I also started using more and more, actually. So that's something that, in this case, is a perfect example. The break above the 3rd zone, the hook back to the 8 EMA, and the continuation effect. Now, as you can see, I would rather still wait for a bit of a pullback because this is a 4-hour reversal trade, an hourly reversal trade. I'd rather not take the breakout above this top, but rather wait for a bit of a pullback before perhaps taking it to the upside. So that could be one on my list too. The euro odd, probably a bit better than the euro yen, I would say. But I don't know. Actually, euro yen looks a bit better. But I meant the correlation to yen factor I don't like too much. But both are possible, which makes me wonder what will happen with the euro dollar today. But let's see. Still, I think the best Kiwi and pound, and then Aussie, and then maybe euro yen, euro odd. Pound yen looks a bit choppy at the moment. Pound odd is retracing too. Could be maybe the same kind of idea as pound odd. Let's take a look at euro pound. Euro pound has everything bullishly aligned. It is at resistance. Euro looks a bit better, perhaps, but it's still it's definitely not a very clear kind of situation. Slight upside here, but price is at resistance. And then we got, of course, the very exotic pairs, perhaps like Euro New Zealand, Pound Swissy, Pound New Zealand, etc. Does anyone have a favorite in mind by any chance? Oh, I'm curious about the odd New Zealand, but because I see Kiwi upside potential, but odd first downside. So does that make sense on the odd New Zealand? Four-hour is, yeah, indeed, Beverly says it does, and 4-hour is bearishly aligned. 1 hour is a bit choppy. 15 is making a turnover right now. And daily is, the moving averages are kind of intertwined here, but it is breaking below support indeed. So yeah, probably yes indeed. So from my point of view, let's see, we are looking at preferably price to go below level 3. So we still have some space to go before that could become interesting. Now, I don't think that, although I have to do a bit more research on this, I don't think that you could only have to use the level 3 as a breakout. In fact, level 2 and 3 often is where price stops within a range. But I haven't done enough trading on that and research to say that that would be a very good idea. I don't know yet. But I'm curious about the fact that the second and third level could also be used as a bouncing spot, actually, if it doesn't break. For instance, no, I don't have an example, but the idea is that maybe here on this chart, let's see here, yeah, 1, 2, 3. It didn't break 3, and we got the range trade in a way from 3 to the opposite direction. So that the second and third level often stopping price if it doesn't make a breakout. And that I think a one time frame higher could be interesting on that, because if the higher time frame is showing choppiness, then there's an even higher chance that the second and third level will act as support or resistance. If there's a trend going on, then probably the breakout has a better likelihood. And that has everything to do with using just one time frame higher. Doesn't even have to be 2 time frames. On this hourly chart, the 4 hour is important. On the 50-minute chart, the hourly is important. On the hourly, it looks like a trend up. So from that point of view, I can put this tool here on this Swiss yen, and I see the price is above the third and almost hit the fourth. Now is in potential upside mode. It's in an uptrend and is about to post an hourly candle above the band. Let's see how far it is on the 50-minute chart. Now that I know that it is in the breakout territory in the hourly chart, it's in the trending territory on the hourly. And everything is aligned here. Price is trying to break above it again. And it's in the going up, back into the fourth zone, up to the fourth zone, maybe the fifth. Then I can take a look at the 50-minute chart and see how far it is there. Here we're at fourth level. So if it pulls back to the band at the third level, there could be a good breakout trade to the fifth. And that will look something like this on the hourly. The third or second, and I like that. Now this fifth level, of course, is a 50-minute chart. On the hourly chart, I'll be looking for the fifth level on the hourly, or fourth level, sorry. So putting back the hourly tool, there could be, this is the 50-minute target, but this could be the hourly target. So the Swiss yen, I mean, from that point of view, I think has an interesting potential there. Now, I'm not a big fan of trading the Swissy necessarily, but I just chose this cross randomly, actually. But it has things that seem lined up from that point of view. The odd yen is different because the odd yen is staying below the band at the moment. The CAD yen is back at the tunnel. Perhaps the euro CAD, let's take a look. Well, the euro is probably in upside mode. Pound Swiss is at the tunnel. So alrighty. So from that point of view, price is very interesting when it's in away from the third level, at least in the trending environment. When price gets back to the tunnel, it still could be interesting trades potentials, depending on other time frames and stuff like that. But obviously, you're back at a reset moment in a way. That's the whole idea. So does anyone have perhaps any questions? Let's take a look at the heat map maybe and see what's going on. Which pairs did have the most volatility yesterday? Let's see. Pound odd is a funny one, going from negative all the way to positive. with a lot of volatility. Pound New Zealand 2, pound CAD, wow, really big ones. Almost too much of a volatility, in fact, almost. Let's take a look at we didn't look at the pound CAD, I think, and pound New Zealand. Let's take a look at that. But those are really big movers, sometimes difficult to trade. And a bit volatile, maybe too volatile, in fact. Volatility is, of course, pleasant, but let's see, pound CAD. I think I'm missing pound CAD. Let's take a look at pound New Zealand then, first of all. It's the same like the pound odd, in fact, and the euro odd. But I can still take a look. What kind of level is it? Now, this is going to exceed faster those levels because it's just such a big mover. So you're going to see a break of level 3 a lot faster. Here you got a level 3 break, a hook back to the EMA, and there could be a bounce already, in fact. Now, depends on which time frames you're looking at. The 4-hour chart looking like it could actually pull back a bit stronger first. And the hourly is still below the tunnel. The 5th level is the target. But the retracement, I don't know. Because it's in a downtrend on the 4-hour chart. I think that probably a level 2 or 3 is better than the short-term moving average. Don't forget, I like to use the short-term moving average if the trend is in that direction, because then the pullback is typically shallow. In this case, the trend is down. So in this case, I wouldn't use this short-term moving average. I would rather see price maybe hook back and make an inverse head and shoulders before maybe trading it up to that level. Let's see, anything else? Yeah, pound CAD. We did open that. I'm not sure if I would trade this one. If I compare all the pairs, I think that most realistically, pound and Kiwi, I would be trading today. Pound USD and New Zealand USD probably. If I have a chance to trade majors, I would do that. Sometimes I would trade crosses, but pound New Zealand is not one of my favorite crosses. Still mean I could trade it, but then I would have to have no opportunities in other currency pairs. If this is the main opportunity of today, then probably I would be waiting indeed. I would not take a pending order on that one. I would wait for some kind of confirmation that a turn is happening at level 1, 2, or 3. Or somewhere in between, perhaps. So when comparing all those currency pairs, I don't think this one really stands out that much. But when analyzing it, if this would be the only pair I trade in a day, then that's probably the best potential I see for today. Or a turnaround at level 5, by the way. And that too, I would want to see confirmation. I wouldn't be using a pending order. Yeah. All right, pound CAD. Yes, exactly, Beverly. And you have to have a good space to justify that. And a counter trend, it's just going to have less space from that point of view. Well, it seems to be in a pretty big upside here. Let's try this. No. Ah, sorry about that. I guess I was a bit too impatient. I don't know. I'll have to reopen it. 1 second. All right, folks, I'm back. Yes. Why is it not? Oh, good. So 1, 2, 3, we're at level 4. So a bit of a pullback, probably desired. Now I would use the 8 EMA. It would be okay if it breaks above 4. Now it's still at 4. Candle close above 4 would be a break. So at this moment, probably rather wait for pullback to the band and a bounce off the band on a pound CAD. So it depends on what time frame I'm looking at it. On a 4-hour chart, this is a reversal trade. If I'm using the 1-hour chart as a trend chart, then we're getting into a transition mode. Yes, we're on level 4, but we also have to realize that we're breaking above the tunnel, which means that I could use this as a starting point as well. And from that point of view, we haven't reached level 4, but we are only at level 2 probably. Yes. So from that point of view, let me go down to the 15. That does not help that much. No, anyhow, I think that that aside, at the moment, a pullback is needed somewhere roughly into this zone and then a bounce back up. That could be a potential trade to the upside, just similar like the pound USD in fact. So let me go back to those majors. Your USD is getting into the 886 fib, pushing, and getting very, very deep. In fact, very curious if it will make the turn to the downside. Pound USD is yeah, it's about halfway. I would like it actually to go pull back to this 8 EMA preferably, or go even back into the band and bounce again. This is already a decent level though. It's possible. Probably will wait a bit more. It would be different maybe if it, well, if it, yeah, I think that 8 EMA or the band makes the most sense still. Now, mind you, it doesn't mean that it couldn't bounce right here, make another candle like that, another candle like that, but I would still wait for that move to the 8 EMA and then take the next bounce. But it's a decent retracement, definitely. AUD-USD is slightly rejecting off that band. Kiwi 2 would like to get it above that band for a breakout to the upside. Euro yen, this candle close could be the signal, but as I said, it could be Another potential could be to break, pull back, and continue as well. Same for the euro odd. No, that was not the euro odd. The euro yen and kiwi, right? Yeah, kiwi. Break, pull back, continue. So probably the euro yen, pound dollar, kiwi. Pound dollar, kiwi the best. Aussie third, euro yen maybe fourth. Euro odd was on my list, but this just kept pushing, so maybe less likely at the moment. Still need a pullback. Yeah, I think that's about it. And there were some exotics that seemed interesting, right? Which one was that? Perhaps the pound CAD, very similar to the pound USD. Perhaps the Swiss yen. I think I was talking about. I think that was it. Yeah. All right. Maybe some silver. Let's see. Silver is. Hmm. Looks pretty messy. All these moving averages are on top of each other. Gold. Well, gold could be close to closing this space in between the band and tunnel, but it would need to poke out, probably hook back, and then bounce again, something like that. Um, Not jumping for joy. It's not looking that great. All right. Well, I don't think I have much to add. I hope that you will join us for the webinars tomorrow. Today was trend lines, and tomorrow we got to take a look at strategy. Wednesday evening, Ned is going to take a look, continue with his price action trading school, Fibonacci retracement expansions. And Thursday, we're going to take a look at intermarket correlations. So this was maybe a bit different type of trendline webinar. We're more looking at horizontal lines than trend lines, perhaps. But if you missed maybe the trend lines, let me know. I think next month we'll have another trendline webinar, so that'll be soon. But in general, trend lines very useful support and resistance, just like moving averages. They're very complementary to each other, so that's very useful. The fact that a trend line might sometimes point out a support or resistance zone that you really don't have with the moving average, that could be very useful. And of course, horizontal lines are also, in a way, trend lines, or maybe just lines, in fact. But so using combination of trend channels, trend lines, you get pretty good accurate resistance zones and support zones. And I think from that point of view, the euro dollar, could be going into that right now. Still a few more pips up today at 88.6 fib at 114.20. Very interesting to see how this trend line holds. Price can definitely poke through a bit and not invalidate necessarily the trend line. I like to get rid of trend lines when there's an entire candle close, no, not close, but really an entire candle above it or below it. If there's a bit of wick, even a bit of candle above or below it, still like to use that trend line. So we're right at that trend line. It's going to be very interesting to see if price shows any signals of a turnaround here. According to my analysis, it should find resistance about 10 pips higher. So that was one of the trades, of course, I discussed as well at the beginning, not only the breakout to the downside, but the turnaround at this 114.20. Personally, I would think that this resistance spot should not be broken, which means that 114, what is it, 60-ish, 114.60 is a level that shouldn't break unless my analysis is out of the window and it's not what I think it is. So that would be a logical place for me to use a stop loss at least. And now the hourly, if this hourly candle is this big, what I definitely want to see is the next hour having a bit of exhaustion. So very curious how this euro dollar will react. There is going to be some divergence as these tops are broken, which is another supporting factor of a potential turnaround. And well, I guess we'll find out soon enough. Tomorrow we can take a look again and see how this indeed developed in the next 24 hours or so. And wish you good trading, many green pips, and a good day. Cheers.